Of course, the big story on everyone's mind, interest rates. Have rates peaked? Are they coming down? Should buyers wait? Are you wondering what will happen to Orlando's real estate market in 2023? In this video, we're going to be breaking all of that down, so stick around. I'm Savannah Williams of Team Williams in Compass, Florida, and I'm going to be sharing bold predictions for 2023 revealed by Dr. Lawrence Yun, who is Chief Economist of the National Association of Realtors. His yearly predictions about the housing market have been consistently accurate, so you will want to keep watching to find out what we are expecting for the upcoming year. If it sounds like I have a nasally voice right now, it is because I have a cold. There's a lot of stuff going around, so I hope everyone's staying safe and healthy during this winter season. Here's what's happening with interest rates. If you haven't heard about their most recent meeting a couple of weeks ago, the Federal Reserve has increased the federal funds target rate by 50 basis points, bringing the federal funds rate up to 4.25% to 4.5%. This was the 7th time the Fed has increased the federal funds rate to slow inflation. 7 times. And we are all pretty tired. I understand why, as a buyer, this can be very discouraging. Though inflation has been slowing since the Fed has started these rate hikes, the Fed has still not reached their goal of slowing inflation. Dr. Lawrence Yun, who is Chief Economist of the National Association of Realtors, like I said, predicted that the Fed will raise the federal fund interest rate 1 to 2 more times. Now, something to keep in mind is that this federal funds rate affects short-term loans like adjustable rate mortgages, but not so much fixed-rate loans. How does this affect you if you're looking at getting a 30-year fixed mortgage? 30-year fixed mortgage rates have actually been trending downwards since last month, and they have been hovering around 6.3% the past few weeks. However, this can change after the holidays, being that it is a seasonal time right now and the market tends to slow down around the holidays. According to Dr. Yun, the 30-year fixed mortgage moves similarly to the 10-year Treasury yield, which is what the US uses to pay for debt. So by examining the 10-year Treasury yield, economists like Dr. Yun can predict rates for 30-year fixed mortgages. What he has found is great news for buyers. Mortgage rates have already peaked and they are actually on their way down. So while they could go up a little and down a little and up again a little bit, overall they will be trending downwards from the peak we saw a few months ago. And by this time next year, or the fourth quarter of 2023, rates will likely be going down. And you guys, if you want to read more about Dr. Yun's prediction, I will link the article in the description box below. So does this mean that buyers should still wait to see if house prices will continue to drop? I believe the answer is no. I'm actually in the market right now looking for a home myself, and I believe that it's about time in the market and not about timing the market perfectly. And of course, doing what feels right for you financially. As I've showed you in the last market update, home values keep going up in the large scheme of things, and every type of market has its pros and cons in terms of advantages and disadvantages to a buyer or a seller. Though the market has slowed significantly in terms of demand and home prices have dropped a bit since they peaked in the summer, prices are still holding well, and I don't think that they are going to be dropping that much further, if at all. And springtime is one of the most busiest seasons for real estate because many families want to move, of course, before the start of the new school year. So if you are thinking about buying, I still think that now is a great time because there will likely be less competition than what you'll see come March. In the current market, we don't have a lot of panicked buyers like we did last summer and the months prior to that, so you have time to think about a home that you like before you put an offer. Now is the time you can buy the house you really love, and remember, you can always refinance when the rates come down. Something I'm getting for myself after shopping around for loans is what's called a 5-year adjustable rate mortgage. And with this type of mortgage, it will allow me to lock in a rate that is 1 percentage point lower than it would be if I were to get a 30-year mortgage. I would have a 5.37% rate for 5 years, and then after that, it can adjust every 6 months based on the market. And this is a really great deal for this market because I get a lower rate and then I'll refinance later when the interest rates come down. Kathy and I work with some great mortgage lenders who can provide you options so that you can pick the one that's right for you. For those thinking about selling and feel like they've missed out on the buying frenzy, don't worry. The value of your home is still solid and home prices are still higher than they were a year ago. Check these stats out for Orlando. These are from SunStats, a data resource to Florida realtors about what's happening in the market. And as you can see, the average sale price for November 22 is higher than the average sales price for November 21. And these average prices are going to continue to increase over time as they have been. What's even more interesting is that even though we've been moving toward a buyer's market and the market is easier on buyers than it has been for the last couple years, we are still in a seller's market because of the low inventory we've been having and the demand for homes. According to Altos, which is another market resource for realtors, the Orlando market is still a seller's market, so sellers still have a slight advantage. If we look at the up-to-date numbers for the month's supply of inventory, we see that it has been hovering around 2.2 to 2.3 months since September of this year, or 2022. This means that for the last few months, inventory has been stabilizing. Remember that if we're looking at month's supply of inventory and there is an upward trend, then inventory is expanding and more homes are coming onto the market than being purchased. And the opposite is true if the month's supply of inventory is decreasing. In this case, inventory is moving more quickly than being replaced. So it makes sense that we are still in a seller's market if we are seeing that the month's supply of inventory is around the same as it was over the summer. If you have any questions or you are interested in buying or selling, give us a call. We would be more than happy to help you in any way we can. And let me know in the comments, are you surprised by any of the current Orlando market stats or Dr. Young's predictions for 2023? I'm Savannah Williams with Team Williams and Compass Florida. Until next time, have a great week.